Welcome to the Lend Academy podcast, episode number 272. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Zest AI. The world's most innovative lenders use Zest AI software to increase approvals, decrease losses, and automate their lending. Zest AI software delivers powerful risk prediction and borrower assessment for fast, accurate credit decisions that result in more good loans and fewer bad ones. Deemed the gold standard by regulators, the Zest model management system brings together everything lenders need for easy, compliant AI adoption and effective credit model management. Find out more at zest.ai. Today on the show, I am delighted to be talking with Joanne Barefoot and David Ehrich. They are the co-founders of Ehrich, the Alliance for Innovative Regulation. And I wanted to get them on the show because Joanne, who is obviously many of you know, she was on the show 2.5 years ago. But since then, she has co-founded Ehrich, and it's a really interesting organization. It's a nonprofit. They ask the question, what if financial regulation could be more effective and less expensive at the same time? And we talk about what they mean by that. We get into the RegTech manifesto they published over the summer. We talk about digitally native regulation, what that means, what it's going to look like. Joanne actually talks through an example of how it can actually work. We talk about the tech sprints they're doing, how they're really helping with financial crime. We talk about how they see the relationships with some of the banking regulators and much more. It was a fascinating episode. Hope you enjoy the show. Welcome to the podcast, Joanne and David.
It's lovely to be back. Thank you, Peter.
Yes, thank you, Peter. It's great to be here.
Okay, thank you. And it's great to have you back, Joanne. I know it's been about 2.5 years since we last had you on. That time has flown. But maybe, Joanne, obviously a lot of people know who you are, but give us a little bit of background, what you've been working on for the last 2.5 years. I know we're going to get into that in some depth, but just give us a little background.
Great. So I am CEO of the Alliance for Innovative Regulation, or Ehrich, which I co-founded with David. And we are working on trying to catalyze and shape conversion of the financial regulatory system for the digital age. How are we going to digitize the information in the financial regulatory system so that the regulators can keep up with the digitization of the financial industry itself? And working on that with David.
Okay. And David, I know you've been involved in fintech for a little while. Tell us a little bit about what you have done recently.
Sure. Most recently, I was the co-founder of Petal, which is a fintech credit card that's using cash flow underwriting to provide safe and affordable credit to folks who don't have a credit history. But my background is 20 years in payments, both at American Express and at JP Morgan, where I was the head of credit card strategy. And I've also been involved with a number of policy initiatives. I was the head of Bank On and the architect of the National Account Standards, which provides a product development roadmap for banks to provide bank accounts that don't have overdraft fees. Okay. So then maybe, you've touched on it already, but why don't you tell us why you decided to start Ehrich? Obviously, there wasn't really an organization like yours out there. So tell us about what was the impetus behind the starting of Ehrich?
Yeah. So I have worked for decades, more than I should even count, on trying to promote consumer financial inclusion, financial health, consumer protection in finance through regulation. I was a deputy controller of the currency. I worked for the Senate Banking Committee and spent a long time trying to shape a regulatory environment that can do better for consumers. And about 6 years ago, I immersed in technology activities and had the epiphany that technology could solve a lot of problems that regulation is never going to solve, because we have a mixed record of success at best in these efforts toward financial inclusion and consumer financial health. And then I had another epiphany, which was I was at Harvard. I was working on a series of papers, which are on the Harvard website and our website now, 6 papers on this. and was studying the fintech and regtech. And it occurred to me as a former regulator that we weren't going to get the benefit of all of this new consumer technology and finance because we were probably going to regulate it wrong. Not that that is anybody's fault. Our regulators are not designed to be tech forward, and they're designed to be careful and slow and prudent. And how were they going to keep up with both the upside potential and managing the downside risk that's coming with a lot of these changes also in terms of things like privacy? So, at the risk of sounding grandiose, I kind of appointed myself to solve the problem. Since, as you just said, I didn't think anyone else was going to take it on. And then David has a story about how we got together on it.
Well, Joanne likes to say, if it's a really hard problem, then we know we're in the right place. But I like to call Joanne, especially when I was working at Petal, our fintech fairy godmother. And what we did at Petal was take a very regulator forward strategy. So our whole value proposition was transparency to the consumer, but why not then have transparency to the regulator as well? And part of what I saw was the inability of the regulatory community to fully embrace and understand cash flow underwriting. They had many questions, many concerns about it. And so I saw firsthand that the success of Petal and the success of products like Petal were only going to work if they could fit through this very narrow aperture of the regulatory system. And so one of the things that I did at Petal was connect us with the work at FinReg Lab, which is a nonprofit organization that was founded by Melissa Coity, to really try to identify the value of cash flow underwriting and prove its use case for the regulatory community. Joanne and I met because she was an advocate for fintechs that are doing this work. And she recognized the need for the regulators to really understand at a much deeper level the work that was happening in the fintech community. And so we connected because I saw her give a presentation at a convening that was sponsored by the Ford Foundation for financial inclusion nonprofits. And her presentation just resonated for me so strongly because I really felt like she had uniquely hit this nail square on the head and that nobody else was having this conversation. So when Joanne shared with me that she was interested in or thinking about starting a nonprofit that would really dedicate itself to this question, I immediately put up my hand and said, Joanne, we should really talk about this. This is really exciting.
Right. Okay. So, and I want to kind of delve right into it because, when we last chatted, Joanne, and you've always been very optimistic about the future of the regulatory system that we have. And I myself have not been, and I kind of felt like we have, I always thought that there was just too many stumbling blocks. It's too complex in this country. We have this system that's just being cobbled together with over really centuries in some cases. But I want to talk about the RegTech Manifesto because when I read this, and I haven't read every single word, but I have gone through it, and it's. I feel optimistic after reading this. It's because I felt like that, finally there's a bit of a roadmap about what we can actually do to really improve at not just an incremental level. This is really a rethinking of it. So maybe just talk a little bit about the background about the RegTech Manifesto, what it is and what you actually write about in the 100+ pages you've got there.
Great, thanks for asking. It is about 100 pages, and by popular demand, I'm planning to read it on my podcast show for those who would rather listen than read. So that's coming soon.
That's great.
The RegTech Manifesto was a natural outgrowth of the work and thinking that we've been doing, and it was a product of about 18 months of work. We issued it in July, so most of it was written before the pandemic hit, and yet it has been the right thing at the right time as we have been watching the pandemic and the economic downturn and the racial upheaval following the killing of George Floyd. All of these things really galvanizing interest in using better technology in the regulatory and government processes, just to speed things. I mean, we're seeing it in every facet of our lives, including in regulation. And the paper makes the argument first for why we need to digitize the regulatory system in finance. And the reasons why are that regulation has 4 missions: systemic stability, consumer protection, financial inclusion, and countering financial crime. And if we look at those areas, we're doing better on some and worse on others. But with new technology, we could do vastly better on all of them, and probably at a sharply reduced cost for both the government and the industry. And then on top of that, even if we thought we were doing great, if we look at where we've stood traditionally, we know that these tools can't keep up with the change ahead. We've got exponential rates of change in technology. They are transforming the financial system writ large, all of the new kinds of things coming up from Libra to DeFi. And the regulatory process is going to have to speed up. But as I said before, it's not built for speed. So we try to lay out why we need to make this change, why bad things will happen if we don't, and good things will happen if we will. And then what a system like this would look like, what would be its attributes and its defining principles that should guide the design of it. And then thirdly, putting on my hat as a former regulator at the OCC, really trying to lay out how could we actually get there from here, which is the thing that has hung people up, I think, from the beginning of when I began doing this work. Just the feeling that it's too complicated. In the manifesto, we draw on the inspiration of Sir Tim Berners-Lee, who invented the World Wide Web. And, 31 years ago, it's not that long ago. And what we're trying to do is complicated, but not as complicated as that. And so we think there's an opportunity to break this work down into incremental steps. And I am more optimistic than I was last time we talked by far, because it's happening. It's happening everywhere. Maybe, David, you'd like to talk a little bit about that, if that would be appropriate, some of the examples of what's going on in the world.
We like to say at Air, think big, but start small. And I think that your comment about the RegTech manifesto giving you hope is actually, I think, a really important thread here, because what you see both in the ecosystem and in the regulatory community, really strong signs of change that really do give us hope. One of the things that Air was really instrumental in doing was bringing to the US, in collaboration with the Financial Conduct Authority, tech sprints. Mm-hmm. And tech sprints are really just a hackathon. They're a mechanism for doing an intense problem-solving session to solve a particular problem and create a rapid prototyping. But one of the opportunities that we've seen is to really bring this technology to the regulators as an innovation tool. And they have really begun to embrace this. When we brought the first tech sprint here, which was on anti-money laundering and human trafficking, we had an incredible opportunity to showcase this event for over 16 regulators.
16, regulatory agencies.
Regulatory agencies, who sent a number of people. And this has now is starting to get embedded in the regulatory agency culture. We are now providing technical assistance to 6 different regulatory agencies that have either launched or are planning to launch regulatory tech sprint strategies. And you've seen this has already been launched by the FDIC, by the CFPB, and just recently announced the tech sprint that is going to be happening with the Department of Financial Services. So there's some very significant changes in the regulatory landscape.
Mm-hmm, mm-hmm. Yeah, I want to actually dig into it though, because you in the manifesto you talk about digitally native regulation, machine executable regulation. This is a quantum leap, right? This is not just not just an incremental change. Normally a new regulation happens, you see a big printout of 1,000 pages, and then everyone has to go and read it and understand how their company fits in. What I would love you to do is paint a picture for us of what digitally native regulation looks like and how it works in the real world.
So it's developing in pieces right now. I'll give you a couple examples, and then maybe I'll offer you sort of imagine this future.
Sure.
One of the exciting innovations this year has been the G20 tech sprint, which they've done with the Bank for International Settlements and other partners, Monetary Authority of Singapore and others. And they surveyed regulators all over the world. Dozens of them offered use cases for regulator problems that maybe technology could help with. And they distilled it into 3 use cases. One is how regulators can share information in a crisis like a pandemic. One is how to detect financial crime and cryptocurrency. And the third one was digital regulatory reporting. And I was a judge in the third one. And in the course of reviewing the submissions that came in, I was astonished at the sophistication of the approaches that world-class companies are ready to take to try to bring us machine readable regulation. So you can tag the regulation and a machine can figure out, does it apply to my startup or my bank or my product? And what do I have to do? And then even more ambitiously, machine executable regulation in some cases, where in the case of reporting, you would have the opportunity potentially in some areas to have the regulator issue some rules in the form of computer code, which the regulated entity could simply plug into its systems and produce a correct report. The FCA pioneered this idea at the end of 2017. I had convened a meeting at Harvard that June where we had talked about this as a future dream. And the next thing I knew, 6 months later, the FCA ran a tech sprint and successfully proved that they could do it, that they could get a correct report back out of a pool of test data in 10 seconds. Instead of, as you just said, Peter, like 2 years, issue the paper, have everyone read it, have, implement all the operational controls, have all the mistakes that come with that, and so on and so on. So these things are coming real. Those projects are now being incubated in the BIS Innovation Hub in Singapore. And that's the kind of thing we'll have. But if I picture myself as a regulator 10 years from now, maybe sooner, this won't all be done by then. But you can imagine an environment in which I've got tools available to me that are closer to querying something on Google than to reading a regulatory report in the way that we do today. Now, as soon as I say that, everyone panics over the privacy implications and the data security, massive amount of work that needs to be done there. The manifesto does talk about some of the important concepts that need to be addressed. But if I wanted to, suppose I was looking at something that could be turning into a subprime mortgage crisis that would lead to a global recession. And I was wondering how vulnerable was the banking system to contagion from subprime lending practices that were outside the banking system. In 2006 or 2007, there wasn't a way to know the answer to that. In the future, we should be able to know. The regulator should be able to get more information faster. In the pandemic, the FDIC, for example, has undertaken this year a rapid prototyping project to modernize the call report, because they're sitting there in the pandemic and an economic downturn, and they're trying to rely on reports that come in quarterly.
Right.
It's too late. You don't know, they're blind. They have huge blind spots. So we want to give them digitized information. I say give it to them. We're not giving it to them, but we want to help them build the structures that are needed, the architectures that are needed for regulators themselves to begin to create the access they need to real-time data, full sets of data. Bank regulators today still go out and sample files of loans. They rely on these summary reports like call reports or reports sometimes that come in annually, instead of being able to take a look at where trends may be occurring, slice it vertically, look at it horizontally across all the financial institutions and see where the emerging risk trends might be. That's what the future of regulation should be like. And I should say, bringing AI into that data, get the data extracted from the silos where it's all locked up and imprisoned today, and into forms where we can run machine learning and natural language processing over it and find the financial crime or find the patterns of unfairness or find the patterns of emerging risk.
Peter, at its core, we have the technology. This is the technology that's being pioneered today by fintechs and regtechs, right? You know, what we want to do is help the regulatory community embrace that same technology. And it requires some structural changes. And that's what we outlined in the RegTech Manifesto. If you want the regulators to have access to the benefits of AI, then you need to build a system that is interoperable. And it requires that system sit on a data layer that is standardized. None of this exists today. And so this is what we are off to build. This is what we're off to try to help the regulators put in place.
And when you say that, David, do you mean what exactly is Ehr's role here? Are you acting as an advisor? You said like help them build. I mean, are you helping them build this? I mean, what's the role exactly of Ehr?
Right. We are not, like a giant consulting firm that builds, regulatory system. But we see our role as thought leadership and also as exercising the test and learn use cases that can help the regulators gain confidence in some of the early steps that they need to take. So our tech sprint strategy is very much a part of that in terms of helping the regulators see that there's not only a different innovation tool that they can use, but then you can actually produce a digitized prototype that can help solve that individual problem and help the regulators embrace the digital solutioning that's possible.
Mm-hmm. The other thing we're doing is a tremendous amount of convening across these silos. So the regulators increasingly want to come to the table. As you mentioned, in the United States, we have a lot of regulatory agencies. They have interest in sitting down, talking with technology people, talking with industry people and innovators. And I want to emphasize the manifesto was issued, like Tim Berners-Lee's original paper on the World Wide Web, as a request for comments. And we're getting comments from all over the world that you can come on our website and comment and also make notes in a Google document if you want to. But outside of that channel, we are just finding that people are reading it, reaching out, we're meeting new kinds of people, we're building a community of people who have the will and the ability to really make this happen. And many of them are regulators, many former regulators, policymakers, as well as lots of people in the industry.
Right.
So our role is to be a catalyst and a helper.
Mm-hmm.
At the end of the day, the regulators have to do this work internally, but as a catalyst, we're helping them build their readiness for this event.
Right, and on that, I mean, in some ways, this is a very good timing because, I know that Joanne, you've spoken to both Chairman McWilliams from the FDIC and Brian Brooks, the acting head of the OCC, and with both of those people, from my perspective, seem to be the most forward-looking leaders that we may have ever had in those two agencies. So, I mean, it seems to me that you're getting like there is an acknowledgement that yes, you are right. We need to change. And is that what you're hearing from those two agencies?
Definitely so, and from the other agencies as well. We have recent podcasts with those two leaders, and also with the chairman of the National Credit Union Administration, Rodney Hood, who's very, very committed to innovation as well. And the same is true with the CFPB, the Fed, CSBS. We're about to part of the reason we know we're in a good place, Peter, is that we are banning acronyms because we realize talking to lots of tech people who have no idea what CSBS is, for example. So CSBS is a Conference of State Bank Supervisors. We actually made an exciting announcement 2 weeks ago with the New York Department of Financial Services and CSBS that we're putting on a sprint with them on a COVID-driven problem they have, as we talked about before. How do they get information faster, especially from non-banks in a time of crisis? And so we're going to do a tech sprint with them focusing on a starter use case in cryptocurrency, and we'll be doing that early next year.
Right.
But yes, this current group of leaders are very, very focused on innovation, and some of them are not shy about moving quickly, really.
Right, exactly. It's been quite amazing to see the speed that they're willing to move. But I want to talk about last week, because last week, and we're recording this on October 26th. So last week, you had a tech sprint on a specific topic. And at the end of it, you had sort of these open sessions. I caught Chris Larson, the head of the New York Department of Financial Services, since we're not using acronyms, and also Ashton Kutcher, the sort of the entrepreneur / actor. And so, why don't you tell us a little bit about that? It was obviously about a specific topic. Explain the topic and what you sort of got out of the tech sprint.
This was our second tech sprint on financial crime. Our first one I mentioned earlier, we really focused on AML and human trafficking. This is one where we focused on cryptocurrency, and very specifically its traceability in the blockchain, to identify and apprehend perpetrators of CSAM, which is child sexual abuse material. So a very heady topic, very painful at times to engage, but very powerful in the sense that many people think that crypto is a currency that's often used for nefarious purposes. And in some cases that is true. But what we have with crypto that doesn't exist, say with cash, is the traceability on the blockchain. And we are learning through new advances that are being made in crypto analytics. We're learning how to analyze the flow of funds and identify the wallets, the nodes that are particularly active in the purchasing of CSAM. And we're able to do that by connecting those wallets when they actually exchange for fiat currency. And that's a moment when you can actually link an identity with a particular crypto wallet, even if it is anonymous. And so this is the work that our teams did. We had 3 teams from very diverse backgrounds, from crypto analytics, from children's advocates. We had policy folks, regulators, financial institutions, both large and small, all coming together to try to solve this particular problem. And so we had 3 teams. Each team had about 8 or 9 people on it with very diverse backgrounds, and we're able to collaborate over the course of a week to produce a solution. And the solutions were really focused on how to help law enforcement access, leverage, and easily interpret the data that can be made available to them.
Mm-hmm.
We had 5 regulatory agencies, or 6 participating in the sprint. We had the Royal Canadian Mounted Police. We had a judge from the Financial Conduct Authority. FinCEN spoke and was a judge. We had Senator Rob Portman, Congressman Anthony Gonzalez. You mentioned Ashton Kutcher, who was a founder of a group called Thorn, along with Demi Moore, which protects children from these crimes. And this crime is something that is particularly heinous because the children are abused when they're going through the experience that they're put through, and then they're re-victimized as their images are shown potentially forever online. And it's very difficult to find the crime itself. So we had law enforcement involved, people from DOJ and the FBI, the IRS brought down a big case. And we added the dimension of trying to find these crimes by finding their patterns in the money, in addition to the online photographs and videos themselves. And we actually did have one of our teams find some live leads. This was beyond our expectations when we started, but developing these technology approaches, they found what appears to be some live CSAM crime underway, and we were able to have that analyzed by Chainalysis, which was a partner, as was Ripple. The whole idea came from Ripple, and refer it to law enforcement. So it's possible that this effort may have saved some children already. And then the winners are going into presentation to FinCEN to drill down further with whether the tools how the tools they developed might be used in law enforcement.
Right. Now, I remember I was listening to your remarks on Friday morning, Joanne, and you were what was striking to me is that you've got people who are focused on CSAM, and they've got that's their area of expertise. And you've got people who are focused on crypto, and that's their area of expertise. And then you've got other people who are focused on catching these criminals. And like they're siloed in from that. They don't really have the knowledge of the others. And so it seemed like what you were trying to do there that was most striking was to bring together all this expertise, but have them cross-pollinate. So the crypto person now understands about CSAM crimes and vice versa.
Exactly. That's the key to the tech sprint. It's crushing the silos and it's especially bringing the tech people to the table. In the RegTech Manifesto, we have a section where we said the technology people need to be in the room where it happens when we're doing financial regulatory policy. And they aren't usually.
Right.
But when you put them in that room, they'll have a different idea than the rest of us who may be lawyers or policy people are going to have on how you might be able to get at a complicated problem.
Right. No,
part of this, Peter, is that you build lasting relationships.
Mm-hmm.
At these tech sprints, you're not only building relationships, between regulators and market participants, between market participants and subject matter experts, but also between the regulators themselves.
Right.
Even virtually, this one was virtual. The one we did last year was live. And even without being able to grab a beer with each other or whatever, people made friends, and they're going to keep working on these problems.
Right. No, that's in the virtual world we're all used to it now. So it's it is something that we find that people are, I think, pretty open for the most part to creating new connections virtually. We found that here at Lend It with our events. It's been we've been really pleased to see that the people are willing to do that. So we're running out of time, but there's so many other things we could talk about. Maybe just want to hit on, I'd love to get your sense on decentralized finance. And it's something that I'm starting to take more of an interest in. And I don't know if it's anything that you've really thought about at Air, but it feels like to me, it's becoming the next hot thing. And it is, the biggest concern for me about DeFi, the way it's kind of been structured is a regulatory concern. That the technology is great and it's efficient, but because we're sort of combining, cryptocurrency that is cross-border by definition, and it, I feel like the regulatory piece is still unsolved. And is there any work you're doing in that area?
Broadly, so yes, we haven't had a project on DeFi, but we think it really reinforces the case we're making that we can't sit around waiting for bad things to happen if there might be some ahead. We really need to be gearing the regulatory capacity to move quickly without moving too fast and choking off good things. DeFi, crypto itself, Libra, the Chinese I know you spend time in China, they've already got their EU-1 out there. We've got proposals for a digital dollar in the United States and programmable money and central bank digital currencies under discussion in many parts of the world. How are we going to regulate these things?
Yes.
Just really, there's a lot of smart work going on at both the SEC and the CFTC. Sorry for the acronyms, but on using artificial intelligence to begin again to understand patterns. But to do that, we have to get the information in accessible form. So we are really interested in both the upside opportunity of these things and also, which, some of this just can be such a democratizing force if we do regulate it right, driving down the costs of intermediating financial transactions, taking friction out of it. Again, think of the World Wide Web analogy, but fraught with possible problems too. The regulators talk about this in the manifesto. The regulators are going to need new skills, new training,
right,
new ways of collaborating with each other, with the industry. It's going to be a big shift,
right,
but necessary and exciting. And frankly, I think the field is attracting tech people because tech people like interesting, worthwhile problems
Right.
to solve. And we've got a lot of them in
Yeah.
the
No,
regulatory.
it's a challenging problem on many levels. So maybe David, last word. Would love to kind of get a sense. I mean, you talked about the CSBS and NYDFS tech sprint, but what else? What else can we see coming out of AIR down the track?
Well, I think what we're working on right now is identifying a series of projects that can really put in place the ideas and the resources that we outlined in the RegTech Manifesto. So really, we're working on a couple of ideas to make them very concrete, make it into a particular project, a demonstration project that can help people really better understand what we're talking about and help regulators understand the first baby steps that they can take to actually begin to achieve digitally native regulation.
Right.
And I think we may have forgotten to say, Peter, that we are launching this phase as what we're calling the regulatory design project. So let's take these ideas and then figure out what is the work that should be done first, concretely, as David said. What are the places where there's the biggest missing link that's holding back progress? And AIR is going to try to take that on with partners, and including launching a series of webinars called the Regulatory Design Series. We'll drill down on all these topics.
Interesting. Okay, well, we'll have to leave it there. I am actually more optimistic than I was last time we chatted, Joanne. So I really appreciate you coming on the show, sharing all this fascinating work you guys are doing at AIR. So thanks, Joanne. Thanks, David. Appreciate your time.
Thanks for inviting us. Thank
The
you.
art of the possible, Peter.
Indeed. Okay. See ya.
Thank you.
Bye. It really struck me after I hung up with Joanne and David that really what's amazing in what they're trying to do is that the cost of compliance is what you read about this all the time. You know, banks, fintechs all have to deal with huge compliance costs, and you know, there's really no way around it. There has been no way around it. But what AIR provides and what Joanne and David just pointed to there is there is a potential future where that can be changed and changed quite dramatically. If we're starting to have this be, you know, imagine like a, you know, digitally native regulation where there's APIs involved and you can know with certainty how your operation is going to be impacted by new regulation, you know, how you can produce reporting that the existing regulation requires, and it can be all done electronically. The cost that can be taken out of the system is quite dramatic, and I think it's an exciting place. And as we also talked when we stop recording, that, you know, this is a really complex problem that they're trying to solve here, and so, you know, they're attracting some of the brightest and best, you know, minds in the world to attack this problem. So one thing I'm really quite confident of is that in 10 years' time, that the way regulation is implemented in the financial system, I think will be very, very different, and that it's going to be exciting to see how that transpires. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Zest AI. Zest AI has been perfecting AI-enabled credit solutions for over a decade and is committed to empowering lenders of all sizes to build, adopt, and operate fairer, more accurate lending models. The Zest Model Management System is the only complete AI solution built specifically for fair and transparent credit. Powerful, compliant, swift, and easy. See how Zest AI can transform your lending at zest.ai.